If you have been struggling as a trader or trading price action, this video is for you. And today I will show you how price action really works. And I will share with you the most important pattern that you have to learn as a trader and one of the most important concepts that will help you to master price action and find the best trades. And the good news is that the pattern that we're going to explore today works for Forex, crypto markets, stocks, and also commodities. And I've included charts for every of those markets. And you will really see that the pattern and the concept that we're going to learn is universal and it's going to really transform the way you understand price action. I've been trading for well over 15 years and I have worked with hundreds of traders, and I've seen very often that traders are fairly decent when it comes to picking the direction. They can estimate fairly accurately is the price going to go up or down over the short term at least. However, most of the traders still lose money and they're not able to make money based off their analysis. Does that sound familiar? Then this video will really help you out. Also, we're going to take a look at market manipulation because it is real. I will show you exactly how it looks on your charts, and the good news is that we will be able to use market manipulation for finding trades and for really improving our trade process. So we are starting with crypto and then we're going to move to all other markets step by step. And this is actually a fairly recent example. We are looking at Bitcoin, and Bitcoin was selling off and trading into 30,000. And everything is looking bearish. The macro situation, the sentiment, everybody was looking for more shorts. And as the market here was pulling a little bit sideways, traders were getting ready to sell below 30,000 and wait for the breakout. The breakout did happen with a very strong momentum. Everything looked perfect. The market rejected 30,000, clearly traded below it. Everybody was jumping on the short side, which seemed to be the only reasonable trade here in the bigger picture. However, just a few candles later, the market did what it did. It squeezed everybody. Everyone who was short was probably squeezed out, sitting on a big pile of losses, and the sentiment suddenly shifted to a little bit more of a bullish side because now it looks like a fake out, and everybody knows if a breakout fails, there will be a fake out. And a lot of traders who were short now reversed their position and they wanted to buy because now they suddenly believe that the dip has ended and the market is going to bounce. So this is a very, very common picture. And what happens afterwards? Of course, the market is going to resume into the original direction. Everything, when we zoom out, looks bearish. There was no point in time where the market really flipped to bullish. This was the breakout. Here we have the fake out. And then as everybody was squeezed and as everybody was really scrambling, the market reversed. And a lot of traders probably said, I knew it, but I still lost money. So the double fake out is really, really common. And we will explore this pattern quite a lot because a lot of traders will believe this is market manipulation. And I think we can even call it that. And what happens here? We have a breakout that really fits into the overall picture. This, as we will see, looks too good to be true, and I will come back to that. If something looks too good to be true, it usually is, and it's also that case in trading. So if that first breakout happens, be very, very wary, especially if it happens in a market that is so commonly talked about and everybody is waiting for the short here. Now let's move over to stocks. And when I made this video, I didn't have to scroll back very long because this is a pattern that happens all the time. So this is also a fairly recent example. We're looking here at the S&P. And by the way, you can use this pattern on any time frame. Previously, Bitcoin was on the 15-minute chart. Now we're looking at a 2-hour. So it's a universal principle. And what are we looking at right now? We're looking here at a market top. The market established here is support level, and it seems like we have some kind of a head and shoulder building. We can say the left shoulder is somewhere here, the head is here. We have lower highs, and here's the right shoulder building. If the breakout is happening, this looks really bearish, right? And the breakout just a few candles later did happen. Now we can see this is the right shoulder, and when we zoom out, the big picture shows that we really rolled over. So it makes sense to look for shorts because that's what the higher time frame and that's what the bigger picture suggests. So it does make sense to go short. You can see here's a lot of bearish momentum. You can see a very strong sequence of selling, and inevitably the breakout did fail. The market traded back higher, and where did it reach into? Into previous highs. So this is not a coincidence that the market broke out and then immediately reversed here into previous highs. Why is that so? Because a lot of traders will have stops here. Also, a lot of breakout traders will probably waiting to buy here when the market breaks out here. You can see this is going to signal higher highs. So clearly the market is going to reach for that liquidity here. However, nothing in the bigger picture has really changed. And you can see the breakout happened here, the fake out happened here. And then As we reached the highs where everybody was ready to turn bullish, the market really collapsed. You can see a huge bearish candle, there was a gap, and then you can see we have a lot of downside gaps as well, and the market did follow through into the initial direction. So we've looked at crypto and also at stocks, and you can see a very common pattern. The best thing that you can do is look for the bigger picture and also look for really clear levels where everybody is going to trade and looking for a trade. And there are three very important principles that you can remember. First, if something is too good to be true, it usually is. If everyone seems to be making money, something is really wrong. The market doesn't work like that. The market is not a place where everybody will end up being rich. So if everybody's talking about the same thing, everything looks so clear and everything looks so obvious for a trade, that should be a really big red flag. And third, stop trading textbook patterns, the textbook style. There's a reason why 95% of all the people lose money. A lot of them will read the same books, follow the same advice, and really approach trading in exactly the same way. So it's very simple for the big players to really understand where's the retail position, how are they going to approach their trades, where are they going to go into breakouts, where will they have their stops, and what are they looking at. So really keep that in mind before we move on. Next, we're looking at crude oil, and what do we have here? We have an exhaustion pattern, right? The market was clearly trading up, and then here, whatever you want to call it, maybe a megaphone pattern, whatever it is, you can see we have exhaustion. The market is not able to push higher. If you use an RSI or a MACD, you will clearly see a divergence, and we have a very clear, well-defined support level. This support level is super obvious. There's no question. Here is a level. And what are we going to do with levels? We're going to trade breakouts. Everybody is now looking for a short breakout because the bullish trend seems to be over. The breakout happened, everybody's jumping short. More traders are jumping short. We already did have a small squeeze, not a very deep squeeze. So initial sellers will probably be still left in their trades. And we have more sellers now that now it looks really obvious, right? Now there's no question the market will go short. But nope. It doesn't work like that. If something is too good to be true, if something is so obvious, then it usually will end up being a bad outcome. And you can see the market reversed all the way back into the previous highs, very clear level 115.5. So everybody who was short here, they will have their stops somewhere in here, maybe even at the highs, and they will be squeezed out of their trade. They will be frustrated. Probably a lot of traders will now look at it and see, now it actually does look like an inverse head and shoulder. The left shoulder here, the head here, the right shoulder here. Time to go long. And because people are impatient, they're just going to go long right now, and they don't want to wait for the breakout because they already lost money. And to make up for that loss, they need to get in early so that if the trade breaks out, they will be first. However, obviously trading doesn't work that way. And right after we had the squeeze here at the top, that's where the real momentum kicks in. You can see that suddenly the market really started to sell off, break, retested the highs, but no deep retest. The deep retest and the liquidity run happened previously. Now the market is really easily moving lower because most of the traders have been squeezed out, and you can see now the real move started. You knew it all along, you knew it, the market was going to go short, but timing such a trade is not as easy. However, after this video, it should be a little bit more straightforward because now you know about the principle, you know about the dangers of first breakouts, and you know how those squeezes look like. First, we looked at crypto, then at stocks, then at oil, and now Forex. And here we're going to look at a continuation trade. You can see the market seems to be in a downtrend. It looks really clear and obvious. We had our first initial push, then a continuation. Now we have our flag, and after flags, usually the market will keep selling off if they occur in big picture trends, right? Look at this. What happened here just a little bit before that flag? We had a range, we had a breakout and a fake out. So this market did it before. Just a few candles ago, the market already did show you the fake out. But because traders really have a bad memory, the market can do the same thing again and nobody will remember. Everybody will do the same thing again here. So people will jump on the breakout, everybody will be short, the stops will be somewhere in here, maybe all above here the highs. And then what is happening? Inevitably, the market is going to push higher, fish for all of those stops, and then afterwards we have the real move. And everybody's scratching their head and wondering, how could this have happened? I knew it was going to go short, but I just was not able to make money, and I even lost money. And it happened previously in the same way. It happens on all the charts, it happens on all the time frames. And it's very frustrating. I totally get it. I have worked with hundreds of traders. Often they scratch their heads and they don't really fully know what is actually the problem. But after studying hundreds and hundreds of charts over the last 15 years, this has been a pattern that really stands out, and I would really encourage you to start looking for it. Don't start trading it right away. First, start paying attention to how this works, how this manifests on your charts. You can also always ask you, how is the average retail trader going to approach this? Where are they going to look for the big levels? Where do they have their common moving averages? Where will they trade their breakouts? Where will they put their stops? Where will they squeeze out? And then look for those momentum pushes. If you see the breakout, the fake out, and then after the fake out you see real momentum kick in, that should be really a very important thing to pick up from your charts. And once you see the momentum come in after a fake out, then that is where you can start building a trading strategy. I hope you enjoyed this video. I hope you learned something new. If you did, leave a comment, leave a like. Make sure to subscribe to the YouTube channel. And as always, we will have new videos every Tuesday, every Saturday, and podcasts every Thursday.